update, the US government has officially shut down. But the real question is, what does this mean for the markets? Is the dollar about to collapse? Will gold shoot higher? Or could the S&P 500 actually surprise everyone? Surprise! In this video, I'm going to be breaking down what a shutdown really is, what still runs, what gets paused, and what needs to happen for it to end. And most importantly, how the markets have reacted in the past shutdowns. We will be looking at DXY, gold, and the S&P 500, so you will know exactly what I'm watching right now as a trader. So grab your notes and let's get right into it. Now, if you like videos like this, I'm going to give you 5 seconds. Help me out by clicking subscribe and also commenting more so that I can produce more videos like this for you guys. 5, 4, 3, 2, 1. Without further ado, let's get back into the video. So first, what exactly is a government shutdown? Now, this happens when the Congress and the White House cannot agree on the budget. It's always about money, isn't it? In other words, the Republicans and the Democrats are fighting over how much to spend and where. And until they can reach a deal, the government legally isn't allowed to spend any money.
No.
This is when parts of the government actually shut down. Now, a lot of people think that the whole country just stops, but that's not true. Essential services still have to continue on. Things like the military, law enforcement, social security payments, and air traffic controls, they all have to keep going. Many other agencies have to pause or slow down. For example, national parks still have to close. So if you are a tourist visiting the US right now, sucks to be you. Passport and visa processing gets delayed, and hundreds of thousands of federal workers get sent home without pay. And now the latest updates suggest that it may not just be temporary. Thousands of federal workers could actually be fired if this drags on. Now here's why this is important for us as traders. Major economic reports like the non-farm payrolls, or NFP for short, and even unemployment claims aren't coming out on schedule. In fact, they're being marked as tentative, and as I'm recording this, they have been postponed to the next week, which means the markets are being left in the dark, trading on uncertainty. Now, this shutdown is also significant because this is the first one in nearly 7 years and the third under President Donald Trump.
Donald Trump? Yeah!
I don't care.
So it's not just about missed paychecks or closed parks, it directly affects the information flow we rely on to trade. So what needs to happen for the shutdown to end? Simple. Congress has to pass a budget or a temporary funding bill and the president has to sign it.
Now I'm going to sign this.
Sometimes it takes days, sometimes weeks. So far, the longest shutdown in history was 35 days, back in 2018 to 2019 when Trump was still in control. Let's talk about the markets, because this is what really matters to us as traders. Historically, shutdowns don't always cause a crash, but they do create some form of uncertainty and volatility. Just to give you an indication of how the volatility of the market looked like during the times of the government shutdown, you can see in this chart right here, all these blue dots represent government shutdowns and the line chart represents the volatility. So if you have a look at the volatility in 2013, it was actually at 10.86, almost close to 11%. There was another government shutdown early 2018, which spiked the volatility up to about 14%. And the last government shutdown on 2018 to early 2019 spiked the volatility to about 21.56%. So this chart shows the impact of the US dollar being affected by the shutdown. As you can see, October 2013 and also the shutdowns in 2018 and also 2019. You can see that most of the times the US dollar will tend to drop for a bit before rebounding after the resolution of the government shutdown. As you can see right here in January 2018, there was actually a drop of about 1.5 to 2% in the US dollar before rebounding upwards once the deal was struck. Now, if we look at the impact of the shutdown on the S&P 500, you can actually see that in 2013, the S&P 500 actually rose by 3.1%. There was one in early 2018, which the S&P 500 actually rose by 0.8%. Now, if you look at the latest government shutdown, late 2018 to early 2019, you will notice that surprisingly, the S&P 500 rose up by 9.3%. So the pattern is clear. Shutdowns more often than not create short-term noise, but they don't usually trigger a long-term collapse. The bigger driver tends to be what else is happening in the economy at that point in time. So right now, I'm watching three things closely. Number one, the US dollar index or the DXY. And this is very important because if confidence in the US politics drops, we may see weakness in the DXY. Gold, however, is often looked as a safe haven to traders. So I would expect that gold continue rising as it has always been. Also, if the US dollar does drop, gold also will tend to continue rising, which makes sense. S&P 500, the history always shows us that it oftentimes dips at first, but then recovers once the political drama is over. So what's the key takeaway here? Shutdowns are more often a political fighting than economic collapse. As traders, it's all about staying calm, watching for overreactions, and taking advantage of the volatility. Alright guys, so that's it for today's breakdown on the US government shutdown and what it means for the markets. And honestly, these kind of videos take quite a bit of time to put together because I have to record, edit, and I have to keep up with the latest news as it changes every hour. So guys, if you found this to be useful, do me a favor, hit the like and subscribe button so that you don't miss out on the next update when I release the video. And if you haven't already watched my latest video where I share my journey testing out Oanda's new $100,000 prop firm challenge, go and check that one out. I'll just link it somewhere around here. Thanks for hanging out with me and I look forward to seeing you guys in the next video. See you guys.